Good morning, everybody. How are you guys doing today? All eight of you. All eight of you in here this morning. Guys, I hope you're doing well. Good morning, Chris L. Ron, no kidding, right? True story. I fell out at 7 p.m. last night. I am well rested this morning. It was a long weekend. It was a great weekend. Hope you guys are doing great. Hope you had a wonderful weekend. Hope you're rested. Um, Apparently everybody's sleeping in. We've got a whopping eight of you in here today, which is okay. Don't tell the other ones, but you guys are my favorite eight, so glad to have you in here. I'll get into it slowly this morning, see if a few more people show up. There's number nine, just showed up. Um, let's check news, because we've got some weird times today. Team formerly known as the Redskins lost in overtime, too. I was watching that. It was a good game. My Texans, though, oh man, they looked like a football team yesterday. They haven't looked like a football team in I don't know how many years have they been a team. Good morning, Snorri. Um, Yesterday was fun. Watched a little football, played a little golf, did Sunday right. Fired up the grill, represented at least three different animal species on the grill. Yeah, Stroud's looking strong, isn't he? About time. Good morning, Eisenhans. Nice to see you back in here. We'll roll into the day. We got people coming in, guys. Let's check news like we do every day, because today's some. You know what, Snorri? I have gotten to the point to where I just accept the results, right? Everyone went out there and played their hearts out. Um, what I got to see was I didn't get to see a lot of it because literally the Ryder Cup started at 2:30 a.m. where I'm at. And I chose to sleep. But what I saw, God, there was some great golf, like some awesome, awesome golf being played on both sides. So how cool just to be out there and do that, and how much fun. That's like the Olympics of golf, right? To get to represent your country and get out there and play. It inspired me. I went out. Snorri, you'd be proud of me. I fixed some things on my golf swing this weekend. Figured some stuff out, so I'm coming for you as soon as I get out of the 90s. This weekend was a good golf weekend. And you know, it's kind of funny. I like to tell the stories about how my golfing relates to my trading, guys. I went to the driving range this weekend because I was chunking the ball a lot, which means you're hitting the ground before you hit the ball, and it was creating all of these problems for me. So I went to the driving range and I said, you know what? I'm going to study what I've been doing and I'm going to see if I can do everything else better. Good morning, D-Rock and Chef. Saw you guys getting in there. And I literally broke my swing down into all the different parts of it, and I determined a couple things. And when I did, went out and decided to play 9 holes. And my first 3 holes, I didn't apply what I had learned. I knew the right answer, but I couldn't seem to apply it for some reason. Sound familiar to anybody? And then I said, all right, let's reevaluate again. Let's go back into it and let's see what I'm doing, what's working, what's not working, right? And it was pretty cool. And then I parred the next 5 holes. Um, so it's a journey. It was cool. For those of you that don't golf, it just means that I fixed some stuff and it got better. But I did it systematically. I went with a plan, and I did my best to stick to the plan. No worries, Chef. So I'm excited. We're doing like the slow talking as people come in today. But remember that it is a journey, guys. And if you've ever done anything in your life that's difficult, it took you a while to get there. So let yourself do it. 72 golf balls. You know what? I like that, Ron. I played with a gentleman. He was about 68, and when he played golf, that's how he gauged his game. He said he quit keeping score long ago. He's like, if I leave the golf course with more golf balls than I started, it was a good round. So he was the guy that would hunt for balls in between shots all the time. It's kind of funny. Monday the 2nd, guys, 9:45 a.m. We've got final manufacturing PMI. That's the low, right? That's the low impact. But at 10 a.m., they're going to actually announce the important stuff. They're going to talk about the ISM manufacturing, the prices, and it's both high and medium impact, which means that the potential is there for the market to go crazy, guys. The markets, it can be spiky and reverse out of nowhere and just really trade too fast um, to trade. So I'm always looking for these news releases. Put a note on a piece of paper, set a timer with your phone. But right around 9:57, that's when I go fill up my water. That's when I go toast a bagel, eat a waffle, do something other than jumping in front of that freight train of emotion. And then at 11 a.m., Fed Chair Powell's going to speak, guys, and that's typically a market mover as well. I hate to be in a position when something like that happens. So every morning I come through and I check forexfactory.com and I make sure that I know when these releases are happening. I make a note because what you're going to find from my broken record speech in the first hour is that advantages are key, guys. Advantages are the key to being successful. Making sure that every time you take a trade, there is a statistical advantage, that there's something that's been proven, documented, studied that gives you an edge when you take the trade. And we're going to see all these edges coming from the tutorial section, from the education page. Everything that I talk about, you can find here. And I like to say this, especially when new people come in. There are no secrets with Nexgen. So if you're brand new with me, I'm literally going to give you anything and everything that you need. I'm not going to hold back from you. I'm not going to give you a little bit of information. And then right when you think you have it, I'm going to say, hey, for $1,000, let me give you the second half of the puzzle. I'm going to give you everything I got. I'm going to unload both guns on you and give you a path to getting to where you want to be. David. I've come close to hitting people before, not gonna lie. I'm at the point in my golf game where I'm no longer a threat to the people around me. Thank goodness. But I've come close a couple times. We're gonna spend the first hour today, and for those of you that have been through the first hour with me over and over, trade away if you don't want to listen. That's totally cool. But we're gonna learn the trigger line and the Fibonacci rules for when it's okay to trade. And we're going to do that on one trade, guys. We're going to do that on a high probability trend trade. And this is a trade that typically wins 70 to 80% of the time when you're able to follow the rules. This is a trade that revolves around advantages. This is a trade that builds a foundation for you. And if you really want to be a day trader, building a foundation is going to be key. This high probability trend trade, I'm going to go to the glossary of common terms. I've had 3 cups of coffee, so if I get a little squirrely, call me out. This high probability trend trade is defined when each indicator on every chart agrees for the trade, guys. We're relating it back to advantages. Your triggers are going to be the strongest. There's going to be nothing in the way between you and your targets. Guys, this is a trade that we focus on heavily for the first hour because the high probability trend trade and the advantages that it takes to enter will make you a chart reader. And I want you to embrace the idea that when you're a chart reader, everything gets easy. You're no longer hoping that the market does something. You're no longer wishing that the market does something. What you're doing is you're taking the information on your screen and you're telling yourself, this is what the market is doing now. I don't have to know where the market may be in 3 hours. I don't have to worry about the news release and what the reaction is going to be. You're simply going to look at your indicators in the moment and you're going to understand where the market is likely to continue. And you're going to use this for an entry as a high probability trend trade. And you're going to understand where the market is likely to go. And you're going to be able to use that for targets. And then I think most importantly, you will understand where the market is likely to stop. And that's what we call a termination condition. And these are the areas where the people who actually move the market, not us, are going to have reactions. This is where they're going to decide to enter trades. This is where they're going to decide to exit trades. This is where they're going to take off a portion of their contracts. And to be honest with you, these likely to stop areas are where small traders like us get beat up when the institutional traders start to fight it out for supremacy. So we're going to recognize these likely to stop areas, these termination conditions, and we're going to use them not only to not enter the market, but we're going to use them as an anchor for the highest probability trend trade that you can take. That trade that typically wins 70 to 80% of the time. And that will be our focus for the first hour, guys. Um, whoops. I just opened a video somewhere. Sorry, I heard my brother in my ear. I was like, oh my gosh, what is that? Um, so we're going to focus on this highest probability trend trade for the first hour. I need you guys to simulate. Pull up your simulator and just practice, guys. Get out there and pull the trigger and break all the rules and go screaming past your boundaries, and just really be active. Be active with everything you do, not only with your simulation, but also with your camera. I want you to take a lot of pictures. Um, and the idea is that you're practicing the correct trades, the trades with the statistical advantage. But you're not going to know whether you're doing it right or wrong as a brand new user, and that's where I come in. So you're going to post a lot of pictures. We're going to talk, and we're going to simplify heavily this morning. We're going to focus on that high probability trend trade. The idea is that you learn the looks so that they become easy, and that's recognition through repetition. And you're going to do that through posting your trades in class. This is the step-by-step path to becoming a confident trader ASAP. Post your trades in class. Every time you post a picture, you and I will have a conversation. Chris just dropped a picture in the room. When we're done talking about the rules, I'm going to click on Chris's picture. We're going to talk about the advantages present. We're going to talk about any challenges that may be there. We're going to look at his entry. We're going to look at his exit. And Chris and I are going to have a one-on-one that you guys are going to listen in on. And every day we're going to do this to try and get Chris right where he wants to be. So posting your trades in class opens up the door for a conversation with me. If you're not 100% certain on something, make sure that you're posting, whether it's a question or a picture. And then you're going to use your spreadsheet a lot. Guys, I want you to get in the habit right now of filling out that spreadsheet, because your spreadsheet's your trade journal. And your trade journal is basically what you're going to use to gauge your progress. Here's your copy of your tracking. Every time you take a trade, it goes in this first page, guys. Copy of my tracking. I took a trade, win, lose, or draw. Let me put it in here so that I can see what I'm doing. Your second page is every time your rules are met. You drop that picture in class, and I'm like, man, this is the perfect high probability trend trade. Chris L., this may be the best entry I've ever seen in my life. You should run a lap and celebrate. Chris is going to take that picture and he's going to drop it in his personal trade setups because that's the one that he wants to repeat. And then the final page is the client trades. And I'm going to drop my spreadsheet in the room for you guys. I've got over 250 pictures of Nexgen users entering the market. And what happens is when you start to look at the advantages and you go through and you look at these trades, you're going to see a couple different things. You're going to notice that the high probability trend trade rules do definitely create advantages. And you're also going to see that there's more than one way to skin a cat. You're going to see little variations on all these different entries because they're all different people's entries and people see things differently. And what you're going to do is you're going to be able to take your own trading, your own pictures of your favorite looks, and then maybe some of the stuff that you pick up in class too from other traders, and you're going to be able to develop a plan that works for you. But the spreadsheet works best if every morning you set aside 5 minutes and just study the previous day's trades. What worked and what didn't work, and what felt easy and what felt forced or made you nervous. And this small study each morning going through is going to prepare you for the day. It's going to accelerate the learning. So if Friday, let's say hypothetically, you traded in determination conditions, hoping that these areas likely to stop the market would break, and you got stopped out quite a few times, if you look at Friday's trades, you're going to say, whoa, wait a minute, this isn't serving me well. I'm going to focus on not trading in determination conditions today and see if we can't up my advantage a little bit. So post your trades in class. Let's learn the rules right now for when it's okay to trade. I want you guys to simulate and embrace the idea that simplicity is key. It doesn't have to be difficult. There's only 3 rules for the high probability trend trade, guys. Um, each rule creates an advantage, and it's the 3 advantages coming together that creates a trade. So a trade is nothing more than momentum, a clear path, and an entry area. And these 3 advantages are going to happen on only 2 charts. This is my favorite part because, guys, I get confused if I look at too much stuff. I love simplicity in my own trading. Your large chart, one bar on the large chart, the most current bar, is going to allow you to define direction, momentum, and areas, guys. Three key elements to the high probability trend trade. Your first two rules will be met on the large chart from that one single bar. And when they're true, you will have the advantage of momentum. You'll also have the advantage of a clear path. So not only is the market railing in the direction of the trend, but there's nothing in the way, guys. And it's like the highway, you're in a semi, you're doing 110, and there's nothing to slow you down. Once these rules are true, you'll turn your attention to a smaller, faster chart. And this is a refinement chart. The smaller, faster chart is going to allow you to take that one bar on the large chart, and it's literally going to refine it down into 15 to 30 bars on a smaller, faster chart. So when the large chart says down, and the large chart says you have momentum, and the large chart says that you have a clear path, we're going to use the smaller, faster chart as a refinement chart to get you to that point where the market is most likely to continue. And this is going to allow you to reduce your risk very much. It's also going to allow you to increase your profit potential. So only two charts. I'm going to put this picture in the room because I want you guys to remember that the large chart leads the way. And then once the two rules are met, we're going to go to the smaller chart, and we're going to make sure that every time we pull the trigger, we're embracing advantages as a brand new user. Um, and as someone that is new to Nexgen, as somebody that's just starting out, focusing on the entries created by the high probability trend trade is going to set you up for success long term because great entries do definitely create manageable trades. So, rule number one happens on the large chart, and rule number one tells us that we have to have the advantage of momentum, that we have to have those strong trigger lines. In order to have strong trigger lines, the only way you can do it is to trade with the trend. And this is probably the easiest lesson that you're going to get ever. If the background on your large chart is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. And if the background on your large chart is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. And I put the little message at the top. What if you never fought the trend? How many mistakes would it eliminate? I can tell you for me personally, it took about half the mistakes out of the equation as I was learning to trade the market. And let's show you just how easy it can be. The most current bar on crude oil is right here. And my background is red, guys. Uptrend or downtrend, especially new users. Help me out with this. Which direction is the market moving? Just based on the most current bar. It's going down, absolutely, Chris. How about NASDAQ? Are we in an uptrend or a downtrend on the NASDAQ? We're in an uptrend. Do you guys see how easy it can be? And then finally, whoa, there's your S&P. Large chart's red, so therefore we must be in which direction? Downtrend, absolutely. Guys, this is, honest to goodness, the biggest advantage that you can give yourself here. I'm closing out my Untitled so I don't go to that blank screen too much. Focusing on what the market's doing right now. It's in a downtrend. I'm only looking for rules to be met for high probability trend trade short. Rule number one says that I must have strong trigger lines. And strong trigger lines are defined when your small triggers, which are these solid triggers, whoops, I did Shift V. These solid lines break above and away from these dashed lines, your large triggers in an uptrend. Small triggers break above the large, that paints the background green. The separation between the two, when both sets are wide, they're angled in the direction of the trend, this is your strong trigger look defined. And in a downtrend, it looks exactly the same. The separation between small and large, like scissors, open, ready to cut. This is your strongest trigger look, guys. This is the look that lets you know that the odds are favorable for the market to continue in the direction of the trend. And it really is pretty much that easy. From the point of separation until they return. This is where next-gen users have the advantage of momentum. And this is where it's most favorable to buy Fibonacci support on a smaller, faster chart, or to sell Fibonacci resistance on that smaller, faster chart, to refine this one bar. into a potential entry. And you will be able to pinpoint right where the bottoms of these bars, these tails, are likely to form through rule number 3. But first, we have to have the first two rules, and this is your advantage of momentum. Guys, give me a Y in the room if you're with me. The separation between the two, both wide and angled, this is the best of the best. And I'm going to tell you right now, odds favorable momentum, it will cover mistakes. I know because I rely on it to cover mistakes every now and then. And then when the smalls return to the large, when they work their way inside, we're going to call these weak triggers, just the exact opposite of strong. And when we have weak triggers, anything can happen up or down. It becomes a little bit of a crapshoot, right? My scissors have closed, therefore, I can't really cut. Um, and what you're going to find is that odds favorable momentum doesn't happen throughout the day. 90% of your day will be spent reading your indicators. 10% of your day will be spent taking the advantage as present and entering a trade. And you'll notice here if we go left to right, odds favorable and then the smalls return, the triggers weaken, and look how it precedes a reversal. We knew not to go short because we didn't have the advantage of momentum. Well, then both small and large are wide and angled in the direction of the trend. Separation is present. I have odds favorable momentum, and there's one of those tails. There's one of those potential entries on a smaller, faster chart. Goes all the way up to weak triggers, another reversal. Odds favorable momentum, another tail and a push down. And then we get into, I think really my favorite part about the rules is when the rules aren't met, my job as a day trader is to do absolutely nothing. When the rules are not in line, when they're not providing me advantages, doing nothing is going to be the hardest thing that I ever do. But when things don't agree, for example, my large are down and my small are up, or my trend is up and my triggers are down, it lets me know that I don't have that first advantage. And guys, this is where the buyers and sellers, the people that move the market, the people that are in control, this is where they're fighting for supremacy. It happens a lot of times between Fibonacci areas. You'll see it reflected in the trigger lines. And what this does for you is it keeps you safe. It keeps you out of that fight because you don't know if it's going to go up or down because there is no clear power taking advantage. And this is where people are tempted to predict what the market will do. Well, the background is green, therefore I think it's going to go up even though my trigger lines are down. And this is where new users may take 5, 6, 7 losses trying to predict. I've seen people go down, then up, then down, then up, then down, then up. And rather than just realize, I don't know what's going to happen, so I'm going to sit on my hands because eventually one of the powers that be are going to grab that advantage. They're going to create the momentum, and then you can start looking for that high probability trend trade. So rule number 1 is on the large chart. Rule number 1 says that we have to absolutely positively have strong triggers because when I do, they give me the advantage of momentum, guys. Is everybody comfortable with that idea? That's rule number 1. On crude oil, my large triggers are up, but my small triggers are down. Do I have odds favorable momentum? If you're just learning this, guys, give me a Y or an N in the room. Anybody? Absolutely no, because my triggers have to agree. They have to be wide in the angled in the direction of the trend. And let's go to the most current bar on what's going to come up next. NASDAQ. Do I have odds favorable momentum on the NASDAQ? Smalls above the large are wide, they're angled in the direction of the trend. What do you think, guys? Absolutely, Chris. Look, there's one of those tails with that odds favorable momentum, and the market kept going up. There's one of those tails, and the market kept going down right to Fibonacci support. That's pretty amazing. And now here I am on the S&P. Do I have odds favorable momentum? What do you think? The small triggers are above the large triggers. I'm in an uptrend. Am I looking at momentum that lets me know that the odds are favorable for the market to continue up? Dwight says no. Dwight, absolutely. Perfect read because in order for this to be odds favorable, they have to be both angled and the direction of the trend, guys. So it really is that simple to recognize odds favorable momentum. That's going to create the advantage of momentum. And momentum is difficult to stop. So, rule number one on the large chart, we have odds favorable momentum. Rule number two is also on the large chart, and it says that we can't trade into termination conditions. And termination conditions are areas that may stop the market, that may reverse the market. They can be blue Fibonacci support, red Fibonacci resistance, yellow one-to-ones, cyan or magenta divergence high and low lines. These are all large chart areas that may stop the market in its tracks. I'm going to give you a picture of the areas just so that visually you have them if you're brand new with me here. In order to determine whether or not these areas are likely to stop the market, there's a two-step process that you guys are just going to go through the habit of doing each and every time you look at your charts. We'll use this picture for it. The first thing that must happen is that price reaches the area. So when I reference price, I mean that most current bar on your large chart. That dynamic Renko bar is a representation of the price of the market. And that price bar must reach an area. And the areas are defined as Fibonacci resistance, Fibonacci support, divergence highs and lows, as well as those yellow one-to-ones. So in this case, these dynamic Renko bars, price, reach Fibonacci support. And when they do, all you have to do is ask yourself, where are my trigger lines? And if all of your trigger lines remain above the area of support, no more short trades into that area because it may reverse the market. It may create a bounce. Fibonacci areas are where decisions happen. This is where the sellers may take profits, where the buyers may enter a position. This is where the sellers may try to push through while the buyers push up, and you may get that indecision that becomes untradeable. So price reaches an area. If the triggers don't break it, absolutely no trades into it. And this is the textbook termination condition. I'm going to show you exactly. Price reaches Fibonacci resistance. Absolutely none of the trigger lines are capable of breaking through. They all remain below. Therefore, in the moment, resistance may stop the market. It may reverse the market. It may create an untradeable bounce. I don't know. And I'm okay with the idea that I don't know. But I do know that I won't trade into it until it breaks, or I won't take a trade until the market reverses and gives me odds favorable momentum the other direction. This area of resistance is considered broken when both the small and the large triggers get to the other side of it. So price reaches it initially because that's what sparks the reaction, but the trigger lines will let me know whether or not it's broken. So price reaches, no triggers, no trade, the path isn't clear. Both small and large break resistance. You see that it begins to act as support. I have odds favorable momentum, and there's one of those little tails. Guys, this is termination conditions in a nutshell. For your first 20 days, allow it to either be or not be, right? Either it's broken or it's not broken. Eventually, you're going to begin to recognize the potential to break, guys. This is going to take you to your second trade, a medium probability trade. And a medium probability trade means that most of the indicators line up for a trade. However, a small issue exists. The first medium probability trade that you take will be a 50-50 trade. And what it means is not that you have a 50-50 shot of winning, right? We want to trade with better advantages than that. It means that 50% of your triggers, good morning, Gary, the small triggers will break above the area that has the potential to hold or break. Smalls break through and the large remain below. 50% are above and 50% are below. If you don't like the numbers, call it a straddle trade. Call it a one above, one below trade. But what it means is that with odds favorable momentum, this area has the potential to break. Areas break all the time, guys, but it takes strong triggers to do it typically. With the potential to break, it's not broken, which means that it's not a clear path. And if we just go back to the basic idea that it takes a clear path to create an advantage for that high probability trend trade, that should be enough to tell you this is not a high probability trend trade. This moves into a medium probability trend trade, and my advantage of a clear path is gone. And we're going to give you a plan. I am going to give you a plan that teaches you to take this trade in the most conservative way. And that's going to be the second trade. After you learn entries, this trade becomes easier. So guys, It's either broken or it's not broken for your first 30 days, and then we'll shift our focus to when it has the potential to break. And again, if we go back to the live chart, that was a crazy downhill push in the S&P, wasn't it? But it came from an area of resistance that was reached, and none of the trigger lines broke through. A termination created the full reversal, guys. And if I scroll back, there's the divergence low line, Fibonacci support, 1-to-1s. None of the triggers broke through. That gave us our push up. The beginning of the up move came directly from Fibonacci support, textbook termination, and look at the push down where it started, right at Fibonacci resistance with absolutely no triggers through. Guys, these are decision-making points. Oh, and look at this. The market's given me a great example. Sellers get out of positions, buyers may take over. There's your push, there's your odds favorable, there's one of those tails. Easy trades happen in the middle, guys, away from fibs, because look, we reach Fibonacci resistance, absolutely no trigger lines break through, and it begins the push down. Is everybody good with the idea that price reaches the area? No triggers, no trade, guys. When both the small and the large get to the other side of the area, support acts as resistance, resistance acts as support. There's that odds favorable in one of those tails pushing us down to the next area. Happens all day long. Price comes down and creates a pivot. The pivot has a loss of momentum. That's what divergence means. That's when the cyan line prints. But it doesn't print until the third bar up. So this is not a termination condition. This is just a loss of momentum at a pivot. And then we embrace the recipe. When price reaches the divergence low, all the trigger lines remain above. Now it's a termination condition. We call this a pivot stop out of a prior divergence. This termination condition tells us no more short trades into the area. If this termination condition creates a reversal in the market, we're going to call it a strong bottom. From a low, a termination that creates a reversal in the market is a strong bottom. And then on that same token, a termination condition that creates a full reversal in the market from a high, we're going to call a strong top. Strong tops and bottoms are the precursor to the highest probability trend trade that you can take. I want to share this picture with you guys because this is the one that reminds you that 90% of your day is spent waiting for advantages. The market pushes all the way up to Fibonacci resistance. When it does, none of the triggers break. It's a termination condition. Nexgen users know not to go long into this area. It doesn't mean go short. It just means we have to wait and see what's going to happen. Let's wait and let the market tell us that it's ready for us to take a trade. From resistance, it pushes all the way down to Fibonacci support in a mid-band. No triggers, no trade. It really is that simple, guys. And this is where new users start to get a little antsy, where their palms get sweaty, their stomach's like, oh my gosh, I've watched the market move and I haven't made any money. How am I going to get paid? You're going to get paid through patience. From support, my large triggers remain a full bar away. That's a pretty good indicator that the market's going to snap back and close that gap. And then it comes all the way back up to Fibonacci resistance. No triggers break through. It's a termination condition. No long trades. Not going to take it anyway, right? Because we don't have momentum. It also reaches a divergence high line. No triggers break through. There's two terminations in the same price range. And then it reaches that second level of resistance. Three termination conditions right in one little area. These termination conditions create a full reversal in the market, meaning that my smalls get below the large, my trend is down, the momentum is present. And there's one of those tails, one of those potential entries, guys. That's your highest probability trend trade. This is the trade that when it happens after a termination that creates a full reversal, this is the trade that typically wins 70 to 80% of the time. This is the trade that all of your patience is rewarded. Not going long into Fibonacci resistance that may stop the market, not going short into Fibonacci support that may stop the market, sitting on your hands and doing nothing until you have the advantage of momentum as well as the advantage of a clear path, and then looking for your opportunity on that smaller, faster chart to enter the trade. Whoops, same picture, right? Price reaches those one-to-ones. The market is screaming with odds favorable momentum, but when it reaches the area, ask yourself, where are the trigger lines? If they all remain above this area of support, no short trades, guys. Don't sit in hope, right? Hope is a horrible way to trade. And let's talk about why I respect these as much as I do. Everything says down, everything has momentum. Price reaches one-to-ones, the triggers don't break, no trade. Guys, give me a why in the room if you're comfortable with the idea that termination conditions can stop the market in their tracks. I want you to feel as though you know exactly where the market's likely to go and where it's likely to stop, and you're going to commit yourself to not hoping that these areas break. Because look what happens. The sellers were in control, but the buyers took over right from that key area. Decisions were made. The sellers weren't ready to give it up. But the buyers wanted to fight, and the sellers said no, and the buyers fought again, and the sellers pushed back. There is zero reason to get caught up in these fights, guys. There is zero reason for you to risk your money over indecision. But ultimately, this termination condition does create the reversal. The reversal does give odds favorable momentum, but we're still looking for that clear path, right? And then once the small and the large break above this area of resistance, it begins to behave as support. My smalls are outside of the large triggers, and there's one of those entries, that highest probability trend trade, and look how it takes you straight to the next area, guys. That's the one that typically wins 70 to 80% of the time. That's your best of the best. Sometimes the market turns, not from a fib. Sometimes the market turns even with odds favorable momentum, not from an area. On a large chart, you're not going to see this change happening in the moment. So there's a termination condition that I'm going to talk about. This is the only termination that I respect on a small chart. And it's three divergences in the same price range. And guys, if you're brand new with me, it's a lot of information coming on day one. I promise you, every day the clarity increases. Three divergences, three losses of momentum in the same price range may terminate a trend. It becomes more powerful when your small triggers work their way inside of the large triggers. That's that anything can happen look. That's those weakened triggers. So visually, you see three losses of momentum. Visually, your indicators are telling you that the trigger lines are also losing momentum, guys. Three may terminate. Three with weak triggers is a little bit stronger. And then if that third pivot's higher than the previous from a low or lower than the previous from a high, now we have a head and shoulders pattern. It becomes stronger still. So on a smaller, faster chart, if I see this happen, I'm going to respect it as a termination condition. I'm not going to take that next short trade because three divergences says that the market may push up or it may push down. This also becomes a very valuable tool as you work your way outside of the high probability trend trade. Because if you are in the perfect trade, and three divergences print, this gives you the opportunity to exit that trade, to cut your losses or to take small profits rather than hoping that the market continues in the direction of the trade. So you're going to see this look from a low or this look from a high when your larger, slower chart isn't able to tell you that that market wants to reverse. So guys, these are termination conditions. These are areas that may stop the market. I'm going to give you a couple pictures. These are termination conditions from a high. Whoops. I'm going to close out termination conditions from a high. Here we go. There's one of those divergence high lines. This line doesn't print until the third bar, which means that it's not a termination condition. Price creates the line, it doesn't reach it. But when price comes back and reaches a divergence high, the triggers remain below. Now it's a termination. Resistance triggers below, termination. Resistance one-to-ones triggers below, termination. If that termination creates a full reversal, we're going to call it a strong top. And what goes up must come down, right? So now we get termination conditions from a low. One-to-ones, no triggers through, no trades. Look how it reverses the market. Fibonacci support, every trigger above, it's a termination. There's one of those losses of momentum. And when price reaches that divergence low, now it's a termination condition. Guys, the recipe never changes. From lows, if price reaches and the triggers remain above, sit on your hands, wait for the reaction. And that is termination conditions 101, guys. So if you're focusing on these two rules, you have the advantage of momentum. Well, we just reached Fibonacci resistance and absolutely no trigger lines have broken through. We have a textbook termination condition on the S&P. Price reaches a divergence low. None of my trigger lines have broken through. Textbook termination condition on crude oil. And then NASDAQ is just screaming to the upside. Notice that trigger lines break resistance. Here's a good lesson on when areas are broken. Price reaches, you can see there was a little fluctuation. Both triggers break, the path is clear, the market continues up. Nothing to do. There's your fluctuation before they break. Both triggers break, resistance becomes support. Resistance becomes support, guys. Just because the market's moving doesn't mean that it's your trade. Just because the market's going one direction, it doesn't mean that that was your money. Your money comes when you have momentum, a clear path, and now we're going to talk about the entry area. We're going to talk about the best of the best entry for the high probability trend trade. And we're going to do that using the smaller chart, the faster chart, that refinement tool, taking one bar on the large chart and whittling it down to an entry on the small chart. Rule number 3 says that you're going to use a limit order, meaning that you're literally going to wait for the market to come back to you. And you're going to use a limit order to buy or sell an area inside of favorable large triggers. And you're going to do that on a retracement. So when the large crowd, the large chart says up, the large chart says you have momentum, the large chart says that there's nothing in the way to create a bounce, you're going to turn your attention to the small chart, at which point a group of yahoos are going to do their best to fight momentum and trend. And they're going to force a pullback, a small retracement in price counter to the underlying trend. Next-gen users, your entry comes from that area inside of favorable large triggers on the pullback, which means that when everything is up, hey, good morning, Next-gen Ben. When everything is up on the large chart, when the path is clear on the large chart, this is the look on your small chart. You're looking for a couple different things. Odds favorable momentum. The smalls are above the large. You're also going to look for what we call favorable large triggers. And favorable large triggers mean that your large triggers on the small chart as well as the synthetic triggers on the large chart, they're overlapping. They're one on top of the other. And it's that overlapping trigger look that gives the smallest potential window of. That's all right. Let Ben put his clinic on in the AM Trader Room. This is the new room class. Guys, don't get starstruck, right? Ben, you know I love you. But everyone trying to be you. Ben, how many years have you had software? Let's answer that question real quick. For those of you that are trying to be Ben. Absolutely. Ben's been doing this for 8 or 9 years, guys. Keep it simple at first. 6 or 7. Keep it simple at first. Keep focused on advantages. And right now we're talking about the advantage of favorable large triggers. When you're small and you're synthetic or one on top of the other, you get the smallest window of opportunity, the smallest point of entry to buy or sell that pullback on a smaller, faster chart. So everything says up. I'm looking at favorable large triggers. I've made the decision to take a trade. And I'm also identifying the areas that will fall within those favorable large triggers. Guys, trend trades come from lines, fibs, mid bands, or yellow 1-to-1s. These are the origin points of a high probability trend trade. But with everything up, you have to wait for that little retracement, for those yahoos to fight. And it begins with a reversal bar. At the time of the reversal bar, you are going to identify your window of opportunity, that point where the market is likely to continue. So when the reversal bar prints, I'm going to identify fibs, midbands, yellow 1-to-1s, and they should be inside of those favorable large triggers coming up at you like a shark about to breach. Your limit order is activated at the top of the window because your large chart has momentum and nothing to bounce off of. So we're going to get in at the top of the window, guys, and this is where you have to realize that you are in control of nothing. With your limit order at the top of the window, the market's either going to come back and get you or it's not. That's not up to you. Um, but you're going to take this trade without hesitation because you're going to go through and you're going to study it. And you're going to understand that you have the advantage of momentum. You have the advantage of a clear path, as well as the advantage now of an entry area because you refine that large chart down to the point where the market is most likely to continue. And this giant yellow arrow points to your entry. You are now in a long position. Guys, for the first 20 days with Nexgen, this is your goal to enter the market at the correct spot, to get in at the areas inside of favorable large triggers. Because when you do, you're going to be able to reduce your risk. You're going to be able to maximize your profit potential. But great entries create manageable trades. And that's really the point that I want to get across. When the reversal bar prints, your job is to look from the top of your triggers to the bottom of your triggers. And this lets you know where to look for areas, guys. This is not your window of opportunity. We refine it even further. From the highest point of support to the lowest point of support inside of favorable large triggers. This is where the market is most likely to continue. This is your entry right at the very top. Um, D-Rock, sometimes when they reprint, like if they update, if they break, you'll get that little chop. Remember that fibs are areas, D-Rock. Let me finish up on entries, and I'm going to go through the areas idea with you. But let me get through entries real quick. Awesome, thank you. The market pulls back. Everything's pulling back, and it reaches your order. Guys, you're now long with every advantage. This is your best of the best. And guys, you're going to notice in Ben's trade, Ben's trading directly into Fibonacci resistance on this trade. Because of his experience, he'll do that. Because he understands through chart reading where it's likely to bounce. Ben, thank you for posting that. I love to see rules on it in the trading room. It makes it a lot easier because it keeps people from fighting direction, from fighting triggers, from fighting termination conditions without the knowledge that you have or the experience that you have. Guys, price pulls back and you're now in the market. You have your advantages. Things that you need to think about. You've created a window. Price may go to the bottom of the window. And that's normal. To see fluctuations against your trade is normal. But we also manage our risk before we ever manage our profits, guys, which means that as the next-gen user, using momentum, using a clear path, using the area where the market is most likely to continue, you also understand where the market shouldn't go. And where it shouldn't go is exactly where your stop is going to be, outside of that window of opportunity. And it's typically 12 to 14 ticks on crude oil or the S&P. And if it hits that stop, guys, you just took a small loser. You managed your risk. But what you did is you entered a trade that has been proven through your study, that has been proven through your pictures, that has been proven through the feedback in the room, to the point to where you trust it to win 70 to 80% of the time. Which means that 20 to 30% of the time, there's going to be a cost of business associated with trading, guys. There's going to be a cost of business. Um, we manage those losses through the window of opportunity, through putting the stop where the market shouldn't go. And guys, this is a normal part of a positive equity curve. Losses will happen. If anyone tells you that you're going to win 100% of the time, they're pulling your leg. It's not going to happen. But this is a trade with all of these advantages that you should never miss when it sets up. Because 70 to 80% of the time, you're going to that profit target. And what happens for new users is you may make a mistake, right? You may think that you had momentum and a clear path, but I need you to post them in the room to make sure that you actually did. Once the market begins to move in the direction of the trade, you can reduce your risk below the reversal bar. This is your high probability trend trade, guys. This is your best of the best. And I want you to see something. Even on that potential to break, when I have odds favorable, Look at how that circle pulls right up to resistance inside of favorable large triggers. This is your study tool. From a termination that creates a full reversal, once again, the market pulls right to resistance inside of favorable large triggers. This is a pattern that repeats itself over and over. This is a pattern that happens in every market. It happens on every time frame. All you have to do is study it until it becomes easy, right? Once again, let's just take a look. Let's circle a tail on crude oil. And it pulls back to resistance, pulls back to resistance, pulls back to resistance. So the idea is that you study this, guys, to where it gets easy, to where you only focus on your entries, because great entries create manageable trades. And I'm going to give you a checklist to police yourself. This is your accountability piece, guys. This is you saying that I want to be held accountable to the best of the best trades. I want to be held accountable to having these advantages every time I trade the market. I want to make sure that each and every time that I pull the trigger, those advantages are present, guys. And this is your trend trade checklist. Print this out, put it on your desktop. Never had anybody be able to check yes to each and every one of these and do less than 70% ever in the history of the checklist. Guys, this is your policing yourself, making sure that every time you get into the market, you have these advantages. And then the second half of that with this checklist, these are the exact same things that I want you to write on your chart when you present it to me. I want you to tell me about your odds favorable momentum and use an arrow to show it to me. I want you to talk about the clear path. Use an arrow to show it to me. And I want you to over here write on your chart. I took an area, or I took a trade at a midband inside of favorable large triggers. Let me know that you understand the rules. Reinforce the looks that go with the words, and it's going to make it easier to recognize in the moment. It's going to increase consistency. When you show me a picture, always show me the large and small chart. Always show me the timestamps and the prices. And most importantly, always show me where you got in, guys, because this is the part that most people need a little refinement on. You can do that by plotting your executions. You right click on your entry chart, go to data series, or you can also just draw circles. This is where I got in, Mark. This is where my stop was. This is where my target was. But this is the key part. This is our conversation each and every time. 2 charts, 3 rules, right? 3 advantages. Police yourself. Make sure that you're comfortable with what you're seeing. I'm going to give you another checklist that has the rules, right? This is what we're looking for. And I've stolen pictures from the resource materials reminding you what it all looks like. You should have this one on your desktop and just review it every morning. What's it look like to have the window of opportunity? What's a termination condition? Remind me what odds favorable momentum is before I start trading. And what is a termination that creates a full reversal, a strong top or bottom? Guys, this is your best of the best. This is keeping it simple. Give me 20 days of focusing on entries. And then embrace the idea that you have to have a plan. The one thing that you're going to notice with traders is that Nexgen Ben, everything he does looks the same. Every trade that he takes looks exactly the same. You'll notice it with Ron C in the room. Every trade that he takes looks exactly the same. The most successful traders that I know, the most successful traders that I know have 1 or 2 trades that they look for. And they just sit on their hands when it's not met. David, there is 0 advantage to these charts if you don't understand your rules on the other 2. But that's what we call a market flow chart. It's a confirmation tool more than anything. You can use it to confirm momentum. So let me show you on the picture that you just had. At the time of your entry, you had odds favorable momentum. I think so, David. I think what you're going to do is you're going to create a lot of conflict in your brain. Because if you're still working on entries, and you're still focusing on being successful with 2 charts, why on earth would you add a 3rd chart? Why on earth would you add completely different looks with completely different ideas, right? Simplicity. Awesome. So I'm going to give you guys the KISS trading plan, the Keep It Simple Sunshine, trademark Bobby T trading plan. And guys, this is a stepping stone in your learning journey. This is me giving you a plan that optimizes your chance of success with the high probability trend trade and that 50-50 trade that we talked about where areas have the potential to break. This is not the end of your road. Unless you want it to be, this is 99% my trading plan. But through simulation, study, class feedback, continuous practice, you will be empowered to craft a plan that's tailored to your personal goals based on your experience reading the indicators. Guys, here's the cool thing is that when you become a chart reader and when you have the repetitions and pattern recognition, is you'll create a plan that suits your needs, just like Nexgen Ben did. And it may have the omission of worrying about termination conditions, when his chart reading says that the conditions are met, guys. And this is pretty cool. This is 15 contracts on Ben's trade to take him all the way up to Fibonacci resistance. It's not a high probability trend trade. Ben was empowered to craft a trading plan tailored to his own needs based on his experience reading the indicators. Until you have that experience, let's focus on the simple plan for consistency. And it begins with never fight large chart direction or triggers. Best advantages you can ever give yourself. Don't fight direction, don't fight momentum. Um, and then define your entries, guys. 20 days defining your entries. That's all I'm asking. 20 days looking for the best of the best, creating manageable trades through outstanding entries. Um, and there's just that checklist. This is what it's going to take to get me into the market. This is exactly what has to happen in order for me to pull the trigger. And I want you to keep it that simple as a day trader, guys. As anybody looking to make money in the markets, there's only two possibilities: rules met, rules not met. So give yourself a little bit of time to learn the rules so that you can hold yourself to that standard. As mechanical as your entry is, this must happen for me to pull the trigger. I must have odds favorable. I must have no terminations. I must have an area inside of favorable large triggers on my smaller, faster chart. Keeping your management just as pragmatic and mechanical is going to create an advantage for you in the beginning as you learn to read your indicators. And your management plan is based on your grade entry. Your management plan is based on taking an entry at an area inside of favorable large triggers, understanding that window of opportunity. Your initial stop will go beyond the window of opportunity where the market shouldn't, and as a brand new user, your options are done. You're either going to get stopped out for a loss, which is okay, it's a normal part of a positive equity curve, or the market is going to bless you with a reversal bar. And when it blesses you with that reversal bar, you will be able to reduce your risk a couple ticks above it, or if it's a long trade, a couple ticks below it. Next-gen users have the ability to manage their risk before they ever manage their profits, and they do that with windows of opportunity and refinement on the smaller chart. At this point, there's nothing for you to do. Once again, your hands are in the air, you're rolling back from the screen. You're either going to get stopped out for a small loss, which is okay. It's going to happen from time to time, or the market's going to reach your first target. And if it reaches your first target, it's only $100, guys, and it doesn't sound like a lot of money at all. But $100 for the brand new user creates elation. It creates confidence through the memory of success. $100 makes you feel like a winner. NextGen's even going to tell you that, or NinjaTrader is going to tell you that your profit target was reached. Guys, this $100, and guys, there's high impact news in 2 minutes. This $100 puts money in your pocket that they can't take from you. You're going to move your stop to break even, and you're going to have no risk in money in the bank, and that's going to make it easier for you to trust the large chart. It's going to make it easier for you to let the large chart lead the way. And you're going to be able to hold for your second contract with absolutely no risk in money in the bank. And if it makes it, it's a $300 trade. And if it doesn't, it's still a $100 trade. But this is the idea for new users, guys. Keep it pragmatic and methodical. Keep it with the omission of of all that opinion, and Ben just said it best, the high probability trend trade is all you need until you have the reps to make your trading plan. And it does work every single day. Next Gen Ben, thank you for putting that in the room. Your opinions carry a lot of weight in this community. They really do, and I appreciate that you put that in there. So guys, mechanical entries on the high probability trend trade, mechanical management on the high probability trend trade, and then you guys remember the path, right? Post every trade you take in the room, and what we're going to do is we're going to work together to get better entries, to get less risk, to create stronger management plans together. You and I are going to work side by side, hand in hand, going towards your goals. This is your first 30 days, guys. Give it the high probability trend trade. Once you're comfortable with it, once you can nail these entries, you can start looking for those 50-50 trades, those medium probability trades, those one area is not broken trades. And it still revolves around momentum on both charts. And if we don't have a clear path, we're not going to give up the advantage of momentum. So no divergence. We're going to incorporate the idea of strong tops and bottoms. And it's even going to remind you that divergence is a killer on these medium probability trades. You're going to take pictures of your medium probability scenario. When the smalls are through, but the large are not, my money is worth a perfect entry. You should have strong triggers on your small chart. You should have no divergence on your small chart. And guys, your window of opportunity should be tiny. There's no reason to risk $200 to $300 on a trade when you're hoping that an area breaks because of momentum, right? So start with the high probability trend trade. Get good, get comfortable, get to the point to where you can do this analysis in a couple seconds, and it'll carry you to the medium probability. And I can tell you right now that this is a trade. I've had people in the room that are doing it right now, 70 to 80% winners. They're finding success every day through simplicity. I would encourage you to do the same. I would encourage you to keep it simple, to keep it focused. Don't give yourself too many things to talk about or to think about. Because one of the most common things that I see in this room, and this is how we'll end the first hour, one of the most common things that I see in the room are traders that are looking for high probability trend trades, that are looking for medium probability trend trades, that are looking for trades that allow them to get in at the bottom, trades that allow them to get in at the top. They're looking for high volume area trades. They're hoping to close the gap back to the trigger trades. And I'm going to tell you right now, guys, if you're looking for 6 different trades and there's 5 different rules for each trade, you're giving yourself 30 things to think about every time you look at your chart. 30 different things to think about each and every time you look at one market. And then these people are watching 3 or 4 markets, which means that they're giving themselves 120 options each and every time they look at the market. And I'm going to tell you right now, one of the biggest things that kills forward progress for new users is giving yourself too much to think about. Keep it simple and focused. Keep it focused on 2 charts. Keep it focused on 3 rules and learn how to get in. And I'm telling you right now, this really is all that you need as a brand new user. You'll find opportunities beyond this, but keep it simple. And then my plea to those of you that are maybe in an Apex fund or a Top Start fund or Top Trader, and you're doing these prop firms, but you can't seem to qualify. You can't seem to get to the end of the road. Ask yourself, am I looking for too much? Because typically, if you just take a deep breath and simplify, it's amazing how quickly the results come. So, guys, that's my first hour. It's the first hour every day of every week. It revolves around advantages. It revolves around odds favorable momentum, right? The potential for a clear path and pullbacks to areas inside of favorable large triggers. That's it. Simplicity leads the way. Are there any questions about high probability trend trades? Is there the concept maybe that I can help with, whether it's odds favorable or terminations? Recognizing that area. Now it's just a matter of repetition, guys. The more pictures that you take over the next 30 days, the quicker you're going to be able to analyze your charts, the quicker you're going to get to where you want to be. And I'm going to tell you right now that your first week is like drinking from a fire hose. So much so that all I have to do is put in DR and drinking from a fire hose comes up, And this is it, guys. This is next gen users in the beginning, that first day. You're taking everything in and you're trying to wrap your head around it. But if you keep it simple, this goes away in a day or two, and really all you have to do is embrace the idea that it's sequential learning, that it is one foot in front of the other. Once you understand trend, you're going to start looking for momentum. And that may take a day or two, right? But once you understand momentum, you can begin to incorporate the idea of a clear path. This will take 2 or 3 days for the average user to trust it. And then once you have that clear path, then you'll be able to look right and you'll find your great entries, guys. Learning to day trade is like eating an elephant. And the only way to eat an elephant is one bite at a time, or it becomes overwhelming. If you don't understand momentum and you just try to get to entries, you're going to take a lot of losers, and that's going to frustrate you, and you're going to feel a little dejected, right? Or if you don't understand a clear path and you keep trading into them and losing, guys, it's going to pull the wind right out of your sails. So make sure that you go through the different concepts, focus on your entries, get the best of the best, and then work your way from there. That's the first hour. I'm going to take 5 minutes. I'm going to go high five my wife, refill my water. Guys, stand up, stretch your legs. I'll leave you with the S&P here. Doesn't look like news did much of anything. We're just continuing that process up. When I come back, we're going to start looking at your charts, and we're going to start answering your questions. So if you have a question, post it in the room. If you have a chart, post it in the room. I'll see you guys in 5 minutes, and we'll continue on. Back in just a minute. Mic silence for a few guys. Into the second hour. So the second hour revolves around looking at what you guys did. Oh, and D-Rock, talking about fibs and areas. That's not the picture. Cool. Let me show you the picture that I wanted to give you guys. This is how your software, and I think this is neat anyway because I'm not a tech guy, but I understand this a little bit. And I remember the phrases from 20 years ago. When you open up your workstations, guys, and you open up those workspaces, your market is going back and it's measuring every swing, every up, every down on the market. Um, it's doing it on the different time frames. It's going backwards historically. It's even creating synthetic time frames forward. And what it's doing is it's measuring all these Fibonacci retracements, all of these different things, and there's literally thousands of individual calculations. Um, and then the magic is the algorithm that my brother created. It depends on two things: which lines are the most important and which prices have the highest concentration of the most important Fibonacci levels. So from all of this, right? Anybody old enough to remember Yar's Revenge? That's what this always reminds me of. These are all Fibonacci levels. But from all of this, we get these blue and red lines. So they are very much areas, right? And they may go a tick or two over, a tick or two below. And I know that you were wondering about when they kind of split like this, right? When you get a bunch of splits in the same area, and that was the 10 o'clock fib update, D-Rock, at 10 a.m., 8 a.m., every 120 minutes, your software recalculates. So this Fibonacci resistance recalculated to this Fibonacci resistance, right? And this one to this one. So based on all of those same calculations, the same ideas, it creates these lines. So you will get these little fluctuations up, down, sometimes even when they break. But knowing that they're areas, so if they're like a tick or two off, man, just respect them. Respect those fibs, I guess is where I'm going with that. Does that help a little bit? So you don't get caught up that it's a 100% precise line. They're based off of thousands of lines. These yellow one-to-ones, D-Rock, 100% specific. It's a 100% alternate of a recent up and down move. The divergence lows, the divergence highs, 100% specific price. But the fibs are, in fact, just a little bit of areas going on. So wanted to make sure that I covered that. I'm going to scroll up to the top of the room, guys, and we're going to start looking at the pictures that you guys have posted. Ron got us going this morning. He says it's going to be an early beach day. Ron's trade is not a high probability trend trade. Not at all. What Ron has done is he's taken his ability to read charts. He's taken his ability to understand momentum. He's taken that clear path concept, but he's created an entry that suits his needs. From his chart reading, participation, feedback, all that picture taking, he looks for opportunities to take snippets out of the market. And guys, this was 6 contracts, $100 or 100 and change each. This is one trade that looks like every trade that Ron takes. Clear path, everything down, and he doesn't shoot for home runs. He just tries to get in and get out, make a little money, and he finds a tremendous amount of success with it. But each and every one of his trades looks exactly the same. It fits a recipe for success that's been proven to win more than it loses. So even though it's not a high probability trend trade, it's an outstanding trade. And he came to this conclusion because he kept going back and looking at what was working and what wasn't working, what suited his taste, what made him confident, what didn't, what was easy, and he created a plan that fits. So Ron, outstanding trade. Anytime you can make $900 in a minute or two, guys, it's a pretty good morning, I think. And then let's look at Nexgen Benz, another person that's taken what he's learned from chart reading to look for opportunities. Ben knows that when everything is up with momentum and every trigger line is above fibs, that these retracement levels create outstanding opportunities. And sure enough, it pulls right back to his level, and he has to keep a pretty big stop on there. But it's just a trend trade. It's just a little different look. And because of his chart reading, he understands where the market is likely to go, and it allows him to take profits, guys. Nexgen Ben's trade trades directly into a termination condition. That's okay. It's his trade, and it works for him. But he does the same thing every day. And that's really what I want you guys just recognizing, is that the same thing every day. All right, Sydney, where was your entry? This is where I have to throw the reminder in there, guys. When you're annotating charts for me, be able to line up your entries with the charts. Let me know where you got in. Be able to circle it, tell me. And Sydney, I'm just not sure where you got in. Did you get in at 55? Did you get over here at 75? Did you try to get in here at 90? Legs, break, support, clear path. So your clear path was up here. I'm just curious where you got in. Everything says up. The areas are breaking. Divergence probably took you out, but it's a little bit of an incomplete picture, which makes it difficult for me to give you the best possible. You're at the beach. I love it. So, Sydney, if you'll grab that picture of how to annotate charts, I'll drop it in the room one more time. It really will help me give you better feedback. It's a chart that uses range bars as opposed to the dynamic Renko bars, and it studies the volume inside of each bar. So you got it at 75, Sydney? So when everything broke, you took the pullback to support and then took it up to your exit when divergence is said? Absolute rock star, my friend. Clear path, everything says up. You take the pullback to support, likely to hold, and sure enough, it does, and the market continues up. Three divergences in the same price range says the trend may be over, and absolutely it was. Sydney, beautiful trading. Thank you for that. The one advantage Sydney didn't have was momentum, right? But he did have a clear path, and he had an injury area. So it was medium probability trade, and he used divergence to get himself out of the position when it changed. Sydney, beautiful work. And I know that you understand your plan because you've been very consistent on it. Just because it's a teaching class, the more information is always better. Chris L., everything says down. The momentum is its strongest. You take a pullback to resistance inside of favorable. Get out of the trouble spot. Let's see what you wrote. This was an undisciplined trade. You executed based on boredom. Overall trend was down, but you didn't let the triggers pass through the midband prior to selling. All right, Chris. So this opens the door um, for a great lesson. Are you with me in here? I want to talk about advantages first. You have a termination that creates a full reversal, right? That's a big plus. You have odds favorable momentum. That's a big plus. You have all charts agreeing, another big plus. The only challenge in this trade is that divergence line. That's the only challenge in this trade. This midband doesn't mean anything. You don't have to let triggers get through the midband because the midband is only a termination condition. Drum roll, please. And let's do it from the actual education material. The midband is only a termination condition if the large triggers are a full bar away. And that's that gap theory. So if price reaches a midband and the large triggers are a full bar away, that's the only time a midband is considered a termination condition, Chris. Your large triggers were almost through it, so the midband meant absolutely nothing in that scenario. Does that make sense? Awesome. And then we did reach a divergence low, and that happens sometimes. And it's cool that you posted in here Because now we get to have the conversation, right? A little bit of clarity, it makes it easier. So the mid-band's not a worry, but this divergence low has the potential to stop the market, right? So the path wasn't clear. But let's talk about all the advantages. You've got termination, full reversal, odds favorable, tiny window of opportunity, strong triggers, like 50 things that say down, and one thing that says, careful, we may create a bounce. So, Chris, what you did here is you took a medium probability trade, right? You've made a decision to take this trade, but because of all the advantages in favor, and I really think it starts with that termination that creates a full reversal, you end up with an awesome looking trade, right? And you know where the problem may be down here, so you make money. Is it a high probability trend trade? Not 100%, not at all, but it certainly is a trade with an awful lot of advantages. And that's the natural progression for you guys, is you get to the point where you begin to recognize these advantages right in the moment, and you'll say, it's worth 8 ticks of risk to see if it goes down. So, outstanding trade, Chris. Nice job. And great lesson on the mid band. And then Sydney, let's take a look again. And so now we just made your life easier, didn't we? And Sydney, you reversed your charts on me. Two divergences at a fib. So hard to read. Triggers up and wide. I'm assuming your entry came here. And your exit came up at 41 at the termination condition. So from 39 to 41, 39.7 to 41, about 12 ticks. Sydney, the best thing you could do for me on your charts, on your small chart, just give me one of those. Show me where you entered. Just give me one of those to show me where you entered. Um, and here's an idea, just for all of you guys. When you're annotating charts, and I'm going to go back, and I'm going to take this picture right here, guys, and I'm going to show you the easiest way for you and for me. Both charts are there. Rule number one is odds favorable momentum, right? If you had it, write it and draw an arrow. Rule number two is no termination conditions. So if you had no termination conditions, write it, draw an arrow. And then rule number three, area for entry inside of favorable large triggers, right? And if you had it, whoops, draw an arrow. And guys, this right here will be the easiest way for me to read your charts, but this will also be the easiest way for you to go back and study your charts. Because you're only looking for three things, right? You're only looking for momentum, a clear path, and an entry area. Keep your charts concise, because when you come back to them tomorrow to see what you did, Sydney, you may remember where you got in, but you might get a little confused. Why do I have an arrow that says fib midband, right? Why do I have an arrow going off to the left that says entry when my exit was up here to the right? Pretend like you have to give it to your wife or your husband and explain it to them. So simplicity, right? Simplicity every time. Nexgen Jen needs simplicity. And then this is D-Rock. Yes. Odds favorable, clear path, perfect entry, cost of doing business, D-Rock. But look how easy it was. Odds favorable, clear path, high probability, perfect entry. Guys, 20 to 30 is the cost of doing business. Was that your first trade of the day, D-Rock? You have to have a lot of trust in your rules to start off with a loser, guys. You really do. I've had days where I've taken 2 or 3 losers in a row that fit the rules, and you're like, "Oh man." And this is where trusting the advantages really pays dividends. Because it's not easy to take a loser first time. Manpreet, let's see what you did. Everything says up. I like that you put a question mark on clear path. That is perfect, Manpreet. Because it's not, is it? We don't quite have the clear path. But can we do the same celebration we did for Chris on this? Odds favorable momentum without a doubt, right? And look at that. We're coming off of all these fibs and everything is up and the triggers are up and the momentum is the best. And there's no losses of momentum on the smaller chart and your window of opportunity is virtually nothing. And Manpreet, you take a beautiful entry in between the favorable large triggers. Your risk is managed. And at this point, you could manage it even closer. The only thing that I would say about this Manpreet, I love everything about it. I'm not going to lie. Is 49.36 represents your trouble spot, right? And I know you're only in one contract. So when I get back to this area that hasn't broken, when I get back to this area that might be the party killer, I'm probably not reaching that. I'm not risking quite that much money on there. Does that make sense? And you did tighten it up. Right on. But of course, I can't see it in this picture, so I have to mention it because we're an education class. Beautiful. You made the choice to take the trade anyway, right? The same way Chris L did. With all of these advantages, no divergence, you're like, that momentum's probably at least going to retest. It's just a chart read. And when it gets there, yeah, beautiful trade, Manpreet. Nice job. And then Sydney, everything says up. And it looks like you're taking a momentum style off that bottom and getting out at the trouble spot. Waiting for it to break above and giddy it up. And momentum style, right, Sydney? Everything's rolling. You take that immediate momentum break above. And I love your exit, man. Nice job, dude. You guys are killing it today. Not a lot of pictures, though. The market's not giving a lot, it seems. Oh, Manpreet. You're proud of this quick trade? As you should be. Once again, termination conditions, right? But when all those advantages are present, great entries create manageable trades. Love your management. It's beautiful. 2 weeks in, guys, you can catch these trades. And then here's my favorite part. Ben, virtual hug for you. Is even at 7 years, you know how great these trades are. 2 weeks and 7 years, guys, taking the exact same trade. There has to be something to these high probability trend trades. There has to be something. When triggers are wide, let it ride. And since it rhymes, you know that it's true. Nice trade, Ben. Solid, man. The classics never get old. You guys, can you believe it? That's all the pictures so far. 38 people in here, and only 4 of you took trades. That's crazy. So let's do some chart reading. This is the S&P. If you tried to take the 50-50 trade with odds favorable momentum, the small's through. D-Rock, I did. I praised you. Let's do it again. Because it was perfect, wasn't it? And it just didn't work. No, that's okay. That's why you didn't answer me. You had odds favorable. You had a clear path. You take the perfect entry, and it just didn't work. That's that cost of doing business. Was that your first trade of the day? That's the one thing that I asked in the room. Was that your first trade of the day? It's hard to take a loser on the first trade of the day, isn't it? That's what I was saying. I've had days where my first trades, sometimes my first couple trades, are losers. And when this happens, it's really going to test your resolve. It's really going to test the trust that you have in your rules. And this is why annotation is so key, right? You knew that you had the advantages. You knew that that was the best of the best. You knew that this is a trade that typically wins 70 to 80% of the time. And you knew it because you identified the advantages. And I really do think it makes it easier. It makes it easier to stomach a loss when you know that it wins more than it loses. And if you didn't have 100 pictures of it winning more than it loses, that would be a tough one to swallow. I think it's a great trade. I think your execution is perfect. And the next one traded into a termination condition and won. Yeah, it's the market teaching you to break your rules. I'm telling you. So, guys, my brother and I talk all the time, all day long on Skype. We talk before the market, we talk after the market. And it's a lot of fun. And we always share these different ideas with each other because we both go back and we study a lot. We really do. And I'm going to try and open up this picture that he sent me this morning. And I loved it. And he was reading about what mentoring provides real traders. And the first thing is accountability. And that's what the classroom does, guys. It gives you the accountability. Following your rules, sticking to your plan. John Novak holds me accountable. If I give him a trade that doesn't fit my rules, he knows exactly that I've broken my rules, right? And he'll hold me accountable. Whether it wins or loses, he says, hey, Mark, that doesn't fit your plan. And I'll do the same thing to him. Um, and this helps a lot. When someone holds us accountable, it becomes easier. He's my accountability piece. I'm his. And then feedback. All performance-based professions require feedback loops. And every week a mentor analyzes your results, correct it until you have success. And then what we do, guys, is every trade. I get to be your mentor. What an honor for me. I'm going to look at everything you do and give feedback. So Ron C is going to post in the room, and I'm going to say, Ron, you're kidding me. With odds favorable momentum and a clear path, you're going to take a snippet from here to there, and you're going to make $660, which puts you at 1560 for the day, which means you had a $1,500 day, which means it's time for a chili dog at 11:36 a.m., 10:36 a.m. And Ron will be the first person to tell you that when he deviates from his plan, I have something to say about it. He'll even preemptively, he'll post a chart and he'll go, hey, this one will give you heartburn. And that's how I know Braun took a trade outside of his plan because he knows that I'm going to hold him accountable every day. And he's a successful trader, right? But I still feel compelled to tell him when he breaks his rules. And guys, this is true for anything. If you, chef, you had a mentor when you were learning to cook, right? You had someone that was judging you and helping you and nudging you in the right direction, getting around mistakes. And then Snorri, you had a golf coach that got you to that professional level. And David, you probably had somebody that taught you the equestrian game, right? Nexgen Ben, someone with a motorcycle probably took you out the first time. We used to chase the fast guys on the track all the time, and then they'd tell us what we did. So getting that loop, Michael Jordan had a coach. Tiger Woods had a coach. Wayne Gretzky had a coach. Use the coaching. And then fresh ideas, what's working in the market. And guys, this is where I look at your trades. When I look at Chris L's trades, when I look at Manpreet's trades, and I don't knock you down because it was a termination condition, what I try to do is I try to lift you up and say, hey, with this much momentum and this look and this perfect look, there were enough advantages to take that trade and manage it. And then I'll ask you guys, I no doubt in my mind, Manpreet, you knew that you were trading into a termination condition, right? Your chart reading said this line may stop the market, but with the look and the perfect entry, I'm willing to take it in management. And guys, that's next level trading. Manpreet, that's next level trading. That's incorporating chart read and knowing when it's okay to deviate from your plan just a little bit because there's overwhelming advantages. And John Novak calls it the bar fight. John Novak calls that the trading version of being in a bar fight. And if you've never been in a bar fight, good for you. But if you have, what you know without question is that if the bouncer's on your side, the rugby team is liquored up and they're on your side, right? That big dude that you bought a drink is on your side. Everybody that went to high school with you is on your side. And then the head of the chess club says he's going to whip your ass in front of God and everybody, right? You like your odds. And there has to be some back and forth, recognizing a good top and bottom. And Manpreet, can I elaborate on why the good top or bottom helps so much? Because it goes back to termination conditions. It goes back to the idea that this is where decisions are made, that these key areas are where people that move the market are making decisions. And look at this on the S&P. The sellers tried to break through and the buyers pushed them right back to resistance. And the seller said, oh, we want it to go down. And look what the buyers did. They stopped them cold right at that same area. And they pushed them right up to the same spot. This is where the sellers robbed the buyers of momentum. The buyers tried to get back up there. And the seller said, you know what? Guns a-blazing. And they pushed it all the way down to that key 1-to-1. And the fight continues again. Next-gen users, you never have to get caught up in these areas. You never have to hope that these work. You can simply let them break, right? And if you look at the large chart S&P, there's a huge fight in today's market. So we're going to look for opportunities in between the fights. Does that make sense, everybody? The more you embrace your rules, the more just you'll be floored at how often your rules keep you safe. Gary E. This was from Friday. So Gary, let me get this straight. You don't post a lot in the room, right? But you're saying that with odds favorable momentum and absolutely nothing in the way and a pullback to resistance inside of favorable large triggers, this is a trade that creates an easy, effortless, stress-free win more often than it doesn't? Am I reading that chart right? I love it. Gary, I took the exact same entry on Friday. You want to hear something that stinks? Actually, it doesn't stink for you because your trade is beautiful. This is your first post in the room. It's a hell of a way to start, Gary. What I want to see, though, is I want to see all of your posts, right? I want to see all of your trades, not just the great trades. Show me the ones that aren't working, Gary, and what you're going to find is that we're going to get you outside of those. Guys, I took the same entry because my rules said take this trade. You want to know the truth about three charts? Right here at 10, on one of those range charts that you guys think are so helpful, there was blue Fibonacci support. Gary, I'll give you one guess where I exited this trade because I got caught up on that stupid range chart and didn't let my large chart lead the way. Gary, you made $460 profit on this trade. I hate to admit this, but I make mistakes too. I made $100 on this trade, guys. I made $100 on this trade because I broke my management rule and I let a third chart that I don't even use talk me out of the trade. Gary, this is beautiful, and I'm glad that you posted this because it just reminds me that you have to stick to a plan. We took the exact same entry, though. The exact same entry. I screwed it up, and you did it amazing. Great trade, man. And then Gene, long at the pullback to large triggers, big gap, triggers on right side of trade. As they should, Gary. The large chart leads the way, right? All right. Gene, I know you take a little different looks every now and then. Can we talk about this one? There's a couple things that I really like to point out on this chart. So I'm going to take a picture of your picture. Gene, are you with me? Hey guys, this is for everybody, without a doubt. The first thing that I notice is this is a bad bottom. This isn't a strong bottom. This is a pivot kind of coming from nowhere. Um, that's the first thing that I look at. Am I coming from a termination that creates a full reversal? And the answer on this one is no, which is okay. Ooh, let's see if we can do this. Nope, that's a 50-50. That's the wrong one. S and then I reach a mid band, right, Gene? To the tick, pretty much. Are you comfortable with the gap theory that if the large triggers are a full bar away, it's likely to close the gap? Everybody, give me a Y in the room if you're good with this idea that if price reaches a mid band and the large triggers are a full bar away, Gene, this is you're gonna love this, yeah. But that's okay. You missed it coming through. That's what kept you out. Are you using are you using the range chart for your entry chart as well? And this is kind of where you don't have any areas inside of favorable large triggers, right? For a long trade here at 30, and you don't have them anywhere, it appears. And what really gets me is by the time you come to your entry, where did you get in? Did you get in on this bar up here? See, I can't see where you actually entered. I just know that you did and you got run over. Right at the large triggers on the 8 range. So you got in right here where they were flat. And by the time you get in there, look at your large chart. It's already on its way back down. I like the idea, right? I like the idea of trading with the trend. I like the idea that the smalls are above the large. I think that you recognize that one later. Gene, I'll never tell you how to trade, but there's a reason that Nexgen has been teaching that 5-1 chart for decades. Because those areas help. They really do create an advantage. Um, and it's an incomplete look with the 8 range chart, I think, until you get to the point to where you begin looking for other concepts on it, like reversal bar, triggers roll, snap back. Guys like Siva are taking trades here, but they're taking them up to the mid band, up to the HVA line, and not taking them off of the termination conditions. So again, I don't ever tell you guys which trades to take, but I do feel like the vision that you have of what's happening in the market may be just a little short-sighted without that 5-1, and you may find that it helps a little bit just to check it a little bit as you refine your plan for entries. Alinsky, same trade. You're welcome, Gene. Thank you for posting. So now we can see what the 5-1 looked like too, right? You like this one. You like this area for the long. And then Alinsky, you just forgot that it was a termination condition, right? And guys, we've seen a lot of people trading into termination conditions and doing well today. But the other side of that, and let me show you, no, not sneaky at all. Notice that it's not coming from a good top or bottom here. Hey, Ron, have a good one. Crab Fest today. Ah, have fun. All the termination conditions breaking that we've seen so far today have come from strong tops or bottoms, right? This is a weak bottom directly into a termination condition. And this is really letting the small chart talk you into a trade when the large chart said no. Does that make sense to everybody? Watching the large chart and seeing these areas and seeing these triggers up and saying, man, that looks just like the perfect entry. And it's easy to get married to it a little bit. Absolutely, I will. We'll do it. We'll do a couple examples too. And I'll use Gene's chart. Price accelerates away from the large triggers, hits a midband. That's the first piece, right? The second piece is that your large triggers remain a full bar away. There's room for a reversal bar to get you back to those large triggers. That's the gap theory. And basically what it says is anything between that midband and those large triggers is probably going to get run over. Anything between the midband and the large triggers is probably going to get run over. Um, and then you kind of have to make the decision when it closes the gap. Like if this was a termination condition that created a full reversal, this might be a long opportunity. But because it wasn't, because that is a termination, it creates a problem. And that's the gap theory, essentially. Price accelerates into the midband. Large triggers remain above the reversal bar as it comes down into it, which means that price is likely to close the gap back to the triggers. You see it whether it's fibs, midbands, but this is what defines the midband as a termination condition. But using that reversal bar marker and the location of the large triggers, it just lets you know when patience is kind of the key when you're trading into those terminations. And then there it is as well. This is where a lot of us get excited about shorts, but just because it closed the gap doesn't mean that the termination conditions are no longer valid. So it's a good lesson there. And then, Gene, this was your whole look. It's just one of those trades where you're like, oh, if this was from a termination condition, it would add a little to it, right? This isn't a horrible look for a long. Not a horrible look for a long at all, except for the termination conditions. That's how I trade NASDAQ, D-Rock. But the thing is, do you know what it means if you're trading a stop on the S&P, if you're trading a stop order on crude oil? It means it means that you don't trust your entry, that you don't believe that this methodology gives you the best of the best. It means that you haven't done the research because the reality is, why on earth would I wait for a stop on a reversal bar when I have every advantage coming from a termination? At that point, you're no longer managing risk. Um, and there's times where it's appropriate. If you're a NASDAQ trader, it's appropriate to use that stop. But it's easier to just wait for the advantages, right? So for example here, termination creates a full reversal. Absolutely, D-Rock. Full reversal gives me odds favorable momentum. I've got a clear path. There's another one of those ones that just doesn't work on the S&P. Does everybody see it? It's rules based 100%. Odds favorable, no termination conditions, pulls back to resistance inside of favorable large triggers. You probably took a loser on this one, but if your stop was 4 or 5 ticks outside of the window, you didn't lose much. It's a small manageable loser. And then guys, look at what the S&P has been doing all day. The whole basis of a trend trade is that the trends are going, and the rules were met. It was good, but there's such a fight going on right now. These guys are trying so hard to win. So sometimes there's days where I may take the rules-based trade 3 times, it doesn't work 3 times, and I just say to myself, I'm gonna reset. I'm gonna go back and I'm gonna practice. I'm gonna go back to simulator because it doesn't appear to be following the rules. And get back to it. Get back to basics because guys, you will have losing days. Part of being a successful trader is understanding when you're in the middle of a losing day and just cutting losses. Wait for tomorrow. Um, or go to simulator, right? If you're not on simulator, it's easy to blow out when you try to revenge trade. So good stuff, guys. We are odds favorable into a termination condition. Does everybody see it? You lost that one, Debbie. And this sounds ugly, and it's not intended to, but I hope everyone that's looking for high probability trend trades lost this trade because the rules were met. And your stop was probably about right here, right? Because if it gets above all of this stuff, I don't want to be in it anymore. It has. ES is there's a huge fight going on, Gary. It's tough. It's a great trade that didn't need, if you put your stop all the way up here, look on your large chart where that's at. Doesn't it make sense that if price starts railing above these one-to-ones, so 12 stick. So let's talk about ATM strategies for a second. What do you guys say? I like it because I think they're important, right? So let's talk about bum bum bum. Let's do it together. Just like this. All right, so there's your large chart, there's your small chart, right? Everything says down, and right now you're excited. You're like, "Heck yeah. Whoops. Here comes my trade at 10:42. Get back over there. Everything says down, the path is clear, the momentum is amazing, and I get a reversal bar, right? And at the time of the reversal bar, from my lowest point of the triggers to the highest point of my triggers. You guys are good with this part, right? We're developing that point where the market shouldn't go, or where it should go from the highest point of resistance to the lowest point of resistance inside of favorable large triggers. Chef, this is how you took your trade, right? D-Rock, that's how you took your trade. And you activated a limit order. Probably right here at about 1475-ish, if I had to guess. Market pulls up, and you're in the trade, right? Let's redefine our window of opportunity. 1450, Debbie. From the highest point of the triggers to the lowest point of the triggers, the area is inside. Give me a Y in the room if you understand that this is where the market should go from. If it's going to go, this is the only line on my smaller, faster chart where I anticipate that market bouncing. Is everybody cool with that? So your initial stop from 1475 is 1775. Now let's think pragmatically for just a second. This high probability trend trade, are you comfortable letting it get all the way beyond these one-to-ones? Are you comfortable letting it go all the way up to a mid-band, all the way to the other side of all this stuff? You're willing to risk all of that? Or can we say, you know what? We've defined the area where it's most likely to continue. Let me go 4 or 5 ticks above that area, above that window of opportunity, outside of the large triggers, right? Outside, away from those areas where it's likely to bounce. And guys, look at this. You are even protected right there by these one-to-ones with every trigger line below it. Does that make sense? Who would take a trend trade short from up here? Anybody? Would anybody enter the market here? It doesn't fit your rules. And then certainly that doesn't fit your rules. And you wouldn't enter all the way up here at 1750, right? So does it make sense to leave yourself exposed through all of that, all the way up to 1775. Does that make sense, guys? And I'm going to tell you right now, there's going to be overrun times where it's going to get you. Um, but more often than not, all we're doing is we're identifying where it's likely to continue and then using the simple phrase, where shouldn't the market go? I feel very comfortable on this look that if it trades back above these one-to-ones, then I've lost my advantage of a clear path, right? Then I'm no longer in my best of the best. And especially as a brand new user, what this does is it keeps you, it turns that $150 loser into a $100 loser, right? And guys, $50 is a difference. If you do that on 3 trades a day, that's $150 a day that's not being given up where the market shouldn't go. And that's $750 a week, guys. That's 3 grand a month from correct stop placement. That's significant, wouldn't you say? And this is one of the things that we do is we manage our risk. We manage our risk through the visualization. So let me go back to where I lost my track. So 12 ticks. 12 ticks gives me reaction time, right? I'm not saying that this is a short trade, but if I go short right here, 12 ticks is my reaction time. Look how far away that is. I have time to click on it and put it where the market shouldn't go if this trade's going to work. So I went from 12 ticks to 8 ticks. Does that make sense, everybody? Because look at my large chart. That's not a trade. Up beyond these areas, beyond this midband, that's not a trade. That's a termination that creates a full reversal. But you notice how there wasn't any momentum? And we got exactly what we expected here. But doesn't it feel better to take an 8-tick loss instead of a 12-tick loss, D-Rock? And guys, that wasn't a trade that fit the rules. But there's a great idea on stop placement. And remember that it's not what you do one time that makes a difference. It's what you do over the course of 10, 20, 30 trades that will really set you apart. And this just lets the winnings from your winners get a little more out of it. Nexgen Ben, let's see what you did. Nexgen Ben says that when a termination creates the full reversal, the triggers get below. He takes a continuation style entry off of resistance, right? And then once it starts to break coming through, Ben doesn't give up money. Ben doesn't hope. I like it, Ben. At this point, it either rails through or it doesn't. Because what's the expectation of this trade? That it continues down to the fib, right? And without the advantage of momentum, Ben says, if it spikes back, to hell with it. I'll take a little money and get out. Oh, you went long, didn't you? Okay, so Ben, you went long here. Oh, you did go short. How does that have you negative 175 if you went short here? I'm so confused. If my stop is back here, yep, behind price, it looks like you made money. It's your fancy stop. All right. Fancy schmancy. Okay, I was going to say, you made money on this one. Just because, I guess because it's red. Oh, plus 14, 175. I got it, though. Ben, I'm with you now. I thought you said that you lost 175. Sorry. Sometimes it takes me a second, guys. I'm what's known as a show pony. Not real smart. Takes me a minute every now and then. Going for 500. But guys, that's your continuation style entry. When this termination holds like it does, notice how his small triggers are down, his large triggers are down. and he takes the entry as it's pulling back. I like the trade. I'm a big fan of that entry. Guys, the S&P is just not giving it right now. The S&P is in this huge war. When it's wide, let it ride. When it's not, get stopped a lot. I don't know. What rhymes? And then typically, whoop, there we go. There's crude oil. Everything says up and the market's going up. I love it when that happens. And then here's your NASDAQ. What do you guys think about this one? Do I have any NASDAQ traders in here that caught it? Oh, it was news. Oh, it was at 11 o'clock news, wasn't it? Okay, Alan. So that explains all the indecision, though, doesn't it? You guys want to talk about, and if it was news, it's not a trade, but the patterns still work. Let's talk about what I look for. Gap entry where, Snorri? On the small chart? We might be overlapping lessons. Let's start on the large chart. The first thing that I'm looking for is momentum, right? The old OFM. Are you saying that as a negative or a positive? I guess that's where I'm confused a little bit. The second thing I'm looking for is a clear path. Are you guys with me so far? Everybody sees it? There's your clear path. And why is it a clear path? Because price hasn't reached the areas and all of my triggers are above the previous areas. Guys, remember when I said the easy trades come from in between areas? So because I have odds favorable and a clear path, I'm looking for the entry. I got you. At the area inside of favorable large triggers. So give me a Y. If you see that there's only one line, right? One spot where I'm anticipating this market to continue. The mid-band inside of favorable large triggers, guys, does this qualify for a high probability trend trade? I say yes, 100%. I never miss this trade. And then what Snorri's talking about is a little NASDAQ trick for entries. On the NASDAQ, when I'm looking for entries, and let me show you a picture of it. When I'm looking for entries on the NASDAQ, the large chart rules never change, and it's important that you understand that. The large chart rules never change. I have to have odds favorable and I have to have a clear path. So when the pullback starts, I ask myself, where are my small triggers, guys? This is NASDAQ specific. This is not crude oil. This is not S&P. Where are my small triggers? If they're above the reversal bar marker, when I get to the area, I'm going to go with the area. When I get to the area, if my small triggers are still above the reversal bar marker, I'm taking the trade from the line. But if they're below the reversal bar marker, I'm going to wait for a close on the correct side. So for me personally, this NASDAQ trade, Snorri pointed it out. Do you see how there was well over a full bar to get back to those small triggers? Ben, do you ever use this on NASDAQ entries, or you may be beyond it? This saved my bacon. These small triggers a full bar away told me take the entry at the area inside of favorable large triggers, which means on this particular trade, once the reversal bar prints, I'm risking about 3 ticks. So if it comes back against me, I've got virtually nothing on the trade. And I've got all of these advantages. And then with that much momentum, I'm getting paid at fibs pretty easy. So Snorri, I know that you recognize the gap. Does that mean that you would have entered at the area? And guys, here's NASDAQ. Same thing. Everything says down, right? When you get to the areas, look how close the small triggers are. When you get to the highest area in the window, there's your close on the other side. And hesitation is the lack of trust, right? Or it means that you're thinking about too many things at once. Guys, if you hesitate when your rules are met, you're either looking for too much stuff. Isn't it kind of cool? And it's just from observation. And Snorri, it's from getting my butt kicked so many times that I started to recognize patterns. That's all it is. Here, my small triggers aren't through the area, which means that for me personally, I'm not looking for a trade anyway. But if I was, because the small triggers were so close, I had to do it on the correct side. But again, I don't trade in determination conditions because it rarely works out for me. So even if this one goes down from here, it can go without me because my rules weren't met. It's all patterns. Gap now on CL. Let's take a look. So on crude oil, price reaches midband, support, large triggers are a full bar away. Exactly. It's not a good top. No triggers are through Fibonacci. Not looking for a short trade. And here's why I used to think John Novak was magic. When the market isn't coming from a termination condition, no divergence, midband, full away, they love to finish the move. So we'll put that box up there. They're not guaranteed to finish the move, but that potential is there, and we'll see. Guys, I'm going to take 5 minutes real quick. I am like super hydrated. Last hour is going to belong to you guys. So if you have a question, take a picture of a chart, write your question on there, post it in the room. If you take a trade, post it in the room. If there's something that you want to talk about specifically, just let me know. He calls it unfinished business. And the idea, Snorri, is that the fibs are good, right? So if I get a termination or if I get a pivot that's not from a key area, a lot of times they like to finish the move, unfinished business. It's never guaranteed. But there's your bad bottom, straight to the mid band, gap theory, and it continues down until it creates a pivot stop out. Let's see if we can find a couple examples. Bad bottom, all the triggers through, pulls up to resistance in the mid band. That's what created the move down. Bad bottom, up to resistance, down to Fibonacci support, right? Bad bottom, up to resistance, continues the move down. Bad top, gap theory, they try to push it, but they get stopped. So you see it a lot. And it's never a guarantee, right? It's never this is absolutely going to happen, therefore I'll go long here. Because if you do, you run the risk of getting crushed. But we'll see what happens. You guys watch it for a second. I'm going to take a few minutes. D-Rock, we'll start with you when I get back. Post your questions, post your pictures. I'll be back in about 5, guys. that last hour or that last 40 minutes, wherever we're at here. Um, D-Rock, absolutely perfect. 100% perfect. And D-Rock, can we talk about the win? Way to take an instant lesson, right? Way to take a lesson and without hesitation turn it into practice. 6 ticks is so much better than 12, isn't it? And it looks like you got paid on the first contract. Beautiful trade, man. Beautiful trade. Way to take that lesson. I love seeing that. That's the stuff that excites me, guys. And then Daryl, everything says up. It looks like you're 50-50 on those one-to-ones. Pretty clear. Little tight on there. In a little early, which is cool. But you're like, if it goes beyond it, I'm out. And Daryl, you said 0 for 3 today without breaking rules. It happens some days. That sucks when it happens, but it does happen some days. The next gen Ben, let's see. Everything is above support. Everything says up. And you're like, let's go to the next fibs. And trailing behind pivots. Guys, when you learn to read, you guys don't see it, but Ben has a larger chart leading the way here. And he's just letting it do what the large chart says. Guys, this is what it looks like when you trust the large chart. It really is. This is what it looks like when you let the large chart lead the way. Not getting caught up in all the little fluctuations. Ben, beautiful trade. Yeah, I think it's safe to say the software works. Crude oil, 50-50 from a bad top. Two divergences, 750 so far today. Great job, Jeremy. There's NASDAQ. Just cruising up. Ben, they blew through your targets. Guys, someone told me a long time ago, in life, you're either going to be the boot or the butt, right? So, D-Rock, what's your favorite ice cream? Peanut butter. So it's perfect for you, right? Peanut butter is the perfect ice cream for you. D-Rock, peanuts kill me. So, what you do and what I do have to be different, right? Just because your rules weren't met, Ben's may have been. And let me show you chart reading. Let me help you with Ben's by chart reading. You're going to love this. And D-Rock, you're about to have an aha moment. When price reaches Fibonacci support and every trigger line is way above them, D-Rock, what do you suppose is the most likely outcome? You would never go short into these fibs, right? Especially with the large triggers still, the large triggers never blinked. So what Ben's doing is Ben's saying, you know what? I've been doing this long enough that when everything says up and I get this huge retracement, do you notice that it's also the gap theory? His large triggers not only remained up, but they also remained a full bar away. This is the stuff that new users don't process in the moment. I didn't. I certainly didn't. I would have never gone long with this look because I'm in a downtrend because my smalls are below the large. But what Ben does, and let's do it like this, the new user sees this, right? The new user sees this right here and says absolutely no long trades. The experienced user sees the whole picture, sees the uptrend, sees the strong triggers, sees the area likely to hold, sees the fact that this is just kind of going with the large chart momentum. And neither's wrong. Yeah, neither is wrong at all. Neither trade, the avoidance of a trade or the taking of a trade is wrong. It's just different. But what's cool, D-Rock, is chances are you're going to recognize this at some point, and that was 14,974. Let's see what it looked like at 14,974 on the net. 14. So here's your pullback. Nope, it was back here, wasn't it? 974. So this is what. Oh, I love this, Ben. 974. That's not it, though, is it? I'm missing something here. I think it was. Ben, you got it in even lower. I'm trying to look at it. I can't line it up. Dagnabbit. Um, but basically, that's kind of what it looked like. Man, Ben, I can't find your entry. Too much going on for my brain. That's okay. But the large chart leads the way. Momentum. Momentum, momentum, momentum. And when the large chart leads the way and has momentum, it becomes easier to trade with it. Sorry, that was just a whole lot of couldn't find it, right? Not the best trigger look, but still, smalls working their way back in, but not 100% weakened. One line inside of favorable large triggers. We'll see what happens. It's moving fast today. I guess that news got things going, which is great news for me because I didn't have any rules met this morning while I was looking at it. Hopefully this afternoon I will. Guys, are there any concepts you'd like to talk about? Your entry was at 11:13? Oh, that's the wrong chart. That's the ES, but that's right where the ES continued up too on support that was likely to hold. One of the reasons I don't trade NASDAQ and the S&P at the same time, guys, they're too similar, which means that I have to put too many things together at once. Absolutely. So, Chris, let's just scroll back and we'll do it. When is the midband behaving as resistance? When price reaches it, we'll see how many examples we can find. And the large triggers are a full bar away. So as we're coming up to this trade, price reaches the midband, those large triggers are a full bar away. It lets me know not to go long into the midband. Price reaches midband and resistance, large triggers, closes the gap. Let's see if we can find some other ones. And we'll find some instances of when they're not as well. Here's another example where price pulls back to mid-band, resistance, one-to-ones, resistance, large triggers, a full bar away. Full bar away closes the gap. We'll find it. Full bar away closes the gap. So here off support, Chris, that mid-band's below. Let me find it. Here we go. As we're coming through here, see how the large triggers are really hugged up against that mid-band? There's the tail, there's the momentum. I'm not worried about it because I don't have enough room for a full bar. And if we're not worrying about that mid-band, let's see what it looks like. That was 3:42 a.m. Yeah. So if my large triggers are screaming up coming with that trade, let's see, man, there's been a lot of movement in crude oil today. Then I'm not worried. Does that make sense though? Yep. You've been waiting for those large triggers to cross, but the reality is you just don't need to. The midband's not doing it. You have text and markers on for NASDAQ, but they're not showing. Gene, do you have them set up on both charts? You do have to go through and get them on both charts. Okay, so then the next thing, Gene, is if this one is on my money account and this one is on SIM, they're working off two different counts and they're going to show two different things. They're all on SIM. Hmm. So you have text and markers. And not that I don't believe you. Will you do me a favor? Um, right click on your right chart, on your large chart, and let's make sure that you didn't have them on. And then yeah, and then if you maybe if something changed, I've done that before. I'm like, well, they should be there. But I realized that I rebuilt or I refreshed or I came through and I changed templates. And if you change templates, it'll resort back. So making sure, just double check it, right? Instead of assuming that they're there. And I'm not saying that they're not there. They probably are, but that would be the first thing that I look for. And then guys, small's below the large are wide. They're angled in the direction of the trend. Isn't that the one spot where the market is likely to continue based on the rules? And then Gene, text and marker. And then it's the same all the way across, huh? That's an interesting glitch. I've never seen that before. Um, Gene, congratulations. You found the end of my knowledge rope regarding text and markers. You can always, gosh, I hate it when I can't answer questions because it means that I'm human and it's not my thing. So if you go to, there's your link to Jason. Chances are Jason has seen it and knows what to do with it. All right. Oop, I don't have an ATM strategy, guys, but I'm in at the area where the market is likely to continue. Since I went short without an ATM, I have to hit buy limit one, right? And put it up where the market shouldn't go. And then for targets, if I sold, I have to buy limit one. So for 30 days, whoops, they got me. For 30 days, my whole job is to find that entry. Win, lose, or draw, to find that entry. Been some indecision in the market today. PFI, welcome to the classroom. Hope you had a great weekend. Short against the triggers, doesn't work. Short on the correct side of the triggers, money, 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 money. So all we have to do, PFI, is figure out how to not take this one and get that close on the correct side, right? Isn't that cool? That's almost too easy. But PFI, because we're an educational class, man, I need you to show me your charts, right? I need you to show me your large chart and your small chart. And you got abused today, but the only thing you're showing me is the winner. So you're probably going to continue to get abused. This right here, this is the hey, look at me trade. Show me these. Let's figure out how do we avoid these so that these work out. I'm happy to see you positive. I really am. 46 to 24. That's 20 points on 10 contracts. And you're only up 2 grand for the day. Ben, guys, look at that. 4 divergences in the same location. Everything says down, and Ben went short. Termination condition. Same thing. Ben, love to see your large charts on these, guys. It's easy to show me small chart winners, but remember this is an education room, right? And while I get super stoked on your entries, if there's no lessons in it, if it's just showing off, which is cool, you should be proud of what you're doing. But if there's no lessons in it, if there's no large chart, small chart, if there's no giving me the opportunity to gauge advantages and disadvantages, all you're doing is just saying, "Hey, check it out," right? For NASDAQ, George, and I'm sorry if that upsets anybody that I say that. Guys, remember, there's a whole trader that is the show off room. This one has to have educational value. It's key. Thanks, Ben. I always feel like an asshole when I say that, and I don't ever want to be. Um, but I also want to make sure that nobody gets caught up in thinking that small chart trades are the way to go, guys. Large charts got to lead it. All right, George T. Here's the first picture, and I think this is my new go-to. Um, for when you're trading the NASDAQ. The rules are the same on the large chart. The rules have to be the same on the large chart, guys. There has to be odds favorable. There has to be a clear path. And then the only thing that changes for me is on the small chart. So the two things that I'm looking for entries on the NASDAQ. The first thing I'm doing is I'm looking, where are my trigger lines? At the first bar, reversal bar, they're almost always above the reversal bar marker, guys. Almost always. So what I'm doing is I'm gauging. When I get to my areas where the trend is supposed to happen, where it's most likely to continue, George, I'm looking to see, are my trigger lines above or below the reversal bar marker? And it's really that simple. If they're above the reversal bar marker for a long trade, I'm in at the area because it allows me to manage my risk. Because they're likely to pull back and snap and fill that gap. And then if they're below the reversal bar marker, that's when I exercise my patience. That's when I say to myself, all right, because they're below, when the market comes back, those trigger lines are likely to work as resistance. And because they're likely to work as resistance, I have to be just a little bit patient. And here you see one of those where the small triggers, they act as resistance, right? And here's another one. The smalls say wait. As you're coming up, the small triggers are so close. Um, you took that trade above, the markers didn't work. Gene, I put a link in there for tech. See if Jason can help. Weak triggers, divergence, right? So you're just trying to work the trend. If you got in here, it creates management opportunities. You moved your stop too aggressive. But it's not odds favorable, right, Gene? This is odds favorable. This is anything can happen, and look what happened. Anything. I can't even see 982 on your large chart, and I can't see it on this chart either. So you're just giving me small charts. I don't know what was going on. Um, but it looks like it was a solid trade with momentum, possibly. And it looks like it was a pullback to the area inside. And then it looks like If this was your stop, you got stopped out on the way back to a mid-band inside of favorable large triggers. George, let's see if we can find a live example. Sometimes there is, and sometimes there's not. Here's the NASDAQ right here. If I were the entry, George, see how how these are above the reversal bar marker, and then I get the close below. Of course, I don't have odds favorable momentum, so it's not a high probability. But and this is only on NASDAQ, George. This is just a NASDAQ intricacy. This is something that I've noticed. So John Novak, if you've ever met him, and there's all these great things that he does. Well, he started looking at the NASDAQ. So I thought I'm going to look at the NASDAQ because there's a lot of opportunity is what I thought, right? And then I got on the NASDAQ and I overtraded, and I overtraded a lot. And I did it because I thought if it moves faster, there has to be more opportunities. And I kind of ditched my rules a little bit. I started looking for every entry. Um, and I just started going. So for me, George, both lines have to be above the reversal bar marker in order for me to get in at the area. That's it. If they're straddling it, I wait. This is just my personal plan. Just my straddle, I wait. If they're above it, I'm in at the area. If they're below it, I wait. That's just, those are my, and I trade. Beautiful. Gene, beautiful. That's what I figured it looked like that. You got it down there. Perfect, man. And then certainly a little on the table. Nice job. And then George, just go back and see it. So if you've been trading the NASDAQ, this is exactly how I figured this out. Is I really just kept going by. Gene, have a great afternoon. As I kept going back and I kept looking at my losers, and that's the one thing that I noticed, and it was this look right here. The small triggers acting as support or resistance against the trade, and it kind of took me to that realization that I should never fight because they don't. And then Ben, this is the same trade with data on the 13-2 with your large charts. You've dumbed them down because you get overwhelmed easy. Less is more. Nice job. Less is more concept. Looks like a 13-2. I'm not sure what that one is. And then, but they're Ben's, Bobby. He knows how to read them. We don't. I don't even try. One thing that I've given up on doing is when I see other people trading that don't fit my plan, I look at it, I ask questions. Um, just remember not to trade it, right? Not until you understand. And let's see, D-Rock. Nope. Odds favorable. Clear path. Right where the market should continue. D-Rock, I hate to say it, today's giving you all 30%. Um, it's a tough day today. And it's even harder when you see the ones that break your rules go, right? Today's a tough day. And this is where it's easy to go, oh my gosh, maybe I need to trade my plan, maybe I need to change my plan, maybe I need to look for something else. But what you're going to find is that this is just a snapshot of your last couple weeks, right, D-Rock? Because you were over 70% winners coming into today. And today's just a tough day. Yeah. So let it be a tough day. And if you're on simulator, just keep taking them, man. Keep taking them. Days like today, when my best of the best trade doesn't work 3 or 4 times in a row, I go back to simulator. I'm like, you know what? And then sure enough, it's going to work like a champ. But Ben's absolutely right. Oh, dude, it's hard. That's the hardest part of trading. But you had every advantage. And then Ben's exactly right. Once you get that high probability trend trade down, you're going to find your trades. You're going to tweak your charts to fit your style. All the things, um, all the things that you don't see today, you'll see tomorrow, or down the line, and you get there. D-Rock, you're killing it today. Unfortunately, it's killing you back. And Ben, I love the fact that there's still something for you to learn. Everything says down, and Gary, you went long. Gary, that's not an edge trade. Oh, see, I'm not even sure what you're doing. Everything says down, you go up. Doesn't work. It's financial suicide, D-Rock. And then when you decide to trade with the trend and momentum, it works. And then you fight the momentum and direction, hoping that it works again. Oh, no, that's your exit when momentum goes away. So the lesson here, guys, blue lines don't mean go long. Blue lines mean make sure that everything's right. Gary, that's not even an edge trade that failed. That's counter trend trading. That's fighting every indicator on every chart, hoping that a blue line hopes. Guys, that is, let me I get to share my picture. I haven't shared this one in a while. John Novak, you didn't know that he was a published author, did you? How to Commit Financial Suicide in One Easy Step by John Novak. Chapter 1, they're trading against strong triggers. Chapter 2, they're trading determination conditions. It's okay. Gary, I know that you're looking for consistency, right? These are the trades that you have to weed out if you want to be consistent. When every indicator on every chart says down and you make the choice to go up, that disconnect, you got to get through that. You got to get through that disconnect. And you got to say to yourself, this is ridiculous. Why would I do this? There's not even a reason, right? And that's okay. But if you don't take this one, then you don't get that little stingy feeling that makes you want to go. So I'm not mad at you for it. But the large chart won like it does, right? Now we have a fib. Weaker triggers at the fib. One divergence, not enough to get me long. Hell no, but I'm not going short. Pivot stop out, weak triggers. Not my bag. 50-50 from a bad bottom with a divergence. That one doesn't fit my rules. Because my rules aren't your rules. My trading is very conservative, so just because it doesn't fit mine doesn't mean that it can't fit yours, right? My brother and I see the exact same things. We talk about the reads, but we see opportunities differently. His plan is very different than mine. Um, his plan would make my would make all my hair fall out, right? Um, DL, I'm not sure about this one. Let's see. Let's look at the overall. You can see the fight, right? But we've got one, two, three, four divergences in the same location. Higher. The sellers have been trying to push it down for an hour now, for an hour and a half. There's just no telling. There's no follow through. at all, but three divergences in the same price range may terminate the trend. So if I see this and I get this, I'm more inclined to take one of these. And Ben, it's just a trend trade, isn't it? Everything says down, you let it settle rather than hoping to be first. Once they all agree, you take it. We know that the large chart said down. That's it. And I think that it really is. And I love, Ben, that I can look at your charts and I can really simplify it into a sentence. The large chart said down, so you exercise some patience because of two divergences, because you didn't know if it was going to be this line or this line or this line. So rather than jump in and hope, you let your smallest momentum indicator roll over and you take a snapback to it. It's perfect. And then for you guys that want to use the chart read, everything says down. Resistance is likely to hold because every trigger is below it. Guys, this is your chart reading. Oh, is it trying DL? Right on. There's a point where if it doesn't make it in the first one, you gotta rest a little bit. But guys, check it out. The trend is down. Every trigger is below resistance, meaning that if there's a pullback, resistance is likely to hold. As the market pulls back up, you don't fight the small triggers against the NASDAQ. But when the triggers roll over and you get a little stab back to them right at a mid-band, it's money all the way down. I love this trade. I love everything about it. It's just a little advanced. But it goes back to the exact same chart reading. And yeah, so DL, I wanted to address that real quick. So when I get these bad tops, right? And then it pushes back down. This is kind of a little different. But now we have odds favorable and a clear path, and we're coming from three divergences in the same price range. Odds favorable, clear path, got a reversal bar. I have one line. It is. It's like trading replay at 10 times on NASDAQ. Do you see how I have only one line here, DL? And you're absolutely right. There's that bad top. So what we're hoping is that the buyers really wanted to make 89.60 at this point. And with a couple divergences, it's most likely to come from the area inside of favorable large triggers. Guys, great class today. Great lessons. Ben, thanks for posting in the room and being a part of it. And I want everyone to take from Ben's trades that his large chart leads the way. His large chart tells him when it's time to go long or short. His small chart is just an entry chart and a management tool, the same way yours is. So whether you are a week, a month, 6 months, 6 years, your chart reading is what's going to get you where you want to be, guys. Your chart reading is going to take you to that next level. And I think that's it for me. Crude oil didn't come back to the mid-band, those rapscallions. NASDAQ is just dying to the downside. And then, of course, the S&P is following the NASDAQ as it does typically. If you had a rough day, it's okay. Tomorrow's a new day. It always is. Focus on the execution, guys. Sometimes the results aren't what they want to be. Sometimes the market just doesn't follow the patterns, and that's okay. It was a rough day. So, D-Rock, you're not the only one. There was a lot of times where that market didn't do what the market said it was going to do, and that's okay. And then as you grow a little bit with the software, you'll begin to find those other advantages going through and turn them into trades. So, guys, I'm going to call it. I enjoyed it. Tough market today. It happens. Always the hardest days to teach.